what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And in this video, we're going to be talking about how you can make money doing option plays around stock earnings. So earnings season is filled with a lot of opportunities. When you use the right option strategies, then that's definitely going to help you take advantage of all of that. Okay, so I'm going to break this video down for you into two different parts. First, we're going to talk about what earnings are, okay, why companies even have earnings, when do they happen, and where you can go to get information about upcoming earnings, so that you'll be in the know, okay? And then in part two, I'll go through a few of my favorite and less risky option strategies for earnings, like short spreads. You know, those are definitely my favorites. And my new favorite, honey, iron condors, yes! But first, if this is your first time watching this video, please make sure you click that thumbs up button. It really helps the channel. And also make sure that you subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. And please, you guys, I love it when you leave me comments, but now it looks like I'm having a lot of spam bots, you know, writing in the comment section. So if you see any of these spam comments now, and I want you to notice, it's gonna have a name. It's not exactly Black Girl Stocks. It'll be like Black Girl Stock or something, or some weird thing. So if you see anybody trying to talk to you, talking about message me on WhatsApp, or you know, I have some opportunities and stuff like that, please report that as spam and keep it moving, honey. I can't do anything about it. We're talking about making some coins, and these people are trying to make profit scamming. So just ignore the scammers, and we're gonna keep it moving. And also, I want to say thank you to Mobile Pixels for sending me these two external Trio monitors. So I'm definitely going to be talking more about that a little later in the video. My birthday is on June 30th, so you know, to hook your girl up. What are earnings? Okay, what are earnings? We've talked about this before, but every publicly traded company announces earnings quarterly or every 4 months. With these reports, they're telling us the profit that their business made over that set time, so about 4 months. These earnings are usually going to give you the after-tax earnings per share, EPS, which is very important, your balance sheet information, and all the other financial stuff that's needed to show the company's growth, or sometimes even a decline, no shade. And companies have these announcements to show that the company is doing good as far as profitability goes, because we are investors and we want to know that the company is doing well. Also, really quickly, here's where you can find information about the stock earnings. So first, of course, I'm going to say Tiblio was one of my top places to go for earnings plays, because they lay everything out for you. So if you haven't already, please make sure that you try out Tiblio. I'm going to have the link for you below, and if you are interested, make sure you use my link to get 20% off of your first month. And like I said, they have hundreds of different plays that they update every single day. And so right here, you see earnings plays. I'll click there. And you see we have a good list here, and they'll give you the date. They'll give you the percentage of bullish, neutral, bearish, what's the stock price, and of course, my favorite, the market maker move. We're going to talk about that a little bit later on in the video, but this is really a hot spot for me with the earnings plays. So definitely check out Tiblio. And then of course, you're going to have online sources, you know, like Yahoo Finance. Another one of my personal favorites, Market Watch here. I love some Market Watch. And then you can use your broker too, like Webull. Let's go to Webull. I just want to show you guys. Let me show you where you can find it on Webull. They're going to have it on all of your brokers. So you can get information, just go to market, but you're going to scroll down and then you see here earnings. So we have a list of earnings, the release date, you know, earnings per share estimate. And then Webull also is going to give you a list of earning surprises. And that's when the company's earnings are actually above what was expected. So, you know, that's always going to be good. Anytime it's more, usually the stock is going to go up. And if it's less, the stock is going to go down. Common sense, baby. The last place, I'll say this last place, Thinkorswim. So lastly, Thinkorswim with your screener here. So you can look for earnings here. You can click load, scan, public, and upcoming earnings. So it's as easy as that. And you can put in whatever, you know, whatever specifications you need. We're not going to go into that in this video, but I just want to let you know this is where you can find it. Okay, so that was really quick. That was part one. That was the overall introduction of what earnings are and the basics. And now let's look at a few different strategies that we can do to profit from earnings. I'm curious, you guys, leave a comment below and let me know if you guys have ever actually done either an option play or if you've like bought stocks around earnings, and let me know how that worked out for you, because I'm gonna be honest with you. When I first started getting into earnings plays, I did what a lot of new investors do, and that's just the basic cookie cutter buying a call or a put option. And that's not bad, okay? But it definitely didn't go the way that I expected it to, and the reason why is because of implied volatility. I did not know about implied volatility around earnings, so that's gonna be one of the most important things that I want you to get out of this video. So we've talked about this before, but you can think of implied volatility like the theoretical volatility that the options underlying stock is going to have after the earnings, okay? And because implied volatility is non-directional, so it's a non-directional calculation, that means that it can go either way. A lot of times strategies that have calls and puts, they're going to gain value when the volatility increases before the earnings, and then just like that, they're going to lose value, and then a lot of times more after earnings, because the implied volatility drops so fast. You know how we say higher highs, higher lows, PINDOS, and all the other stuff? Remember this: higher volatility means higher option premiums. So if we're buying options, that means we're going to be paying more. I don't want to pay more. I don't like that. All right, so I want to look at this example. So just look at it, A, B, C, D, E. So this is going to be our implied volatility, calls, puts, straddle, blah, blah, blah. Okay, option prices 1 week before the earnings. So 1 week before the earnings, this is what it's looking like. Our implied volatility, 36%. Our calls cost about $62, puts $62, bam. Now let's go over to C. This is our option prices 1 day before the earning. Okay, so the other one was 1 week before. This is 1 day before. 1 day before, our implied volatility jumped over 50% to 72. Then look at the price of our calls. Child, it's almost $1. So it went up almost like 40 bucks in profit. So let's just keep going and then look at the price of our puts. That's gone up also. Next, let's go option prices 1 day after the earnings. So this is after the earnings. Before, this is 1 day before. This is 1 day after. So earnings has already happened. This is what's gonna happen. Our implied volatility has dropped to 27, honey. Look at our calls. It dropped from 98 cents to $98 to 37, and then our puts have dropped also. You can see that. Let's go to the next one. We have another one. This is the option prices 1 week before earnings. So 44% implied volatility, $75 calls, $80 puts. Then 1 day before the earnings, boom, our implied volatility jumped up to 131%. Our calls are now $180. That's like more than double. And our puts are $184, more than double. And then 1 day after the earnings, our implied volatility dropped even lower than it was before, down to 34. Our calls are even lower than they were. $42, puts it's like half. It's lost half its value. So just from looking at these past examples, you'll see why just buying calls or puts and holding them to get the profit from the earnings can be very risky. Any profit that your option gets from a price change in either direction, no matter what your delta is and all of that profit is going to get canceled out by the huge loss in the option value, because 1 day after earning, you have a much lower volatility. And remember, we said before, higher volatility means higher premium. Premium is the cost of your options. So if you have a lower volatility, you're going to have a lower cost option. The option that you open is now going to be less valuable. Okay. And then I do want to say, even if you do have a huge price movement, so let's say if it moved $20, you're still essentially going to get profit. It's just going to be a lot less because that implied volatility change is going to be eating all that up. So a good way to profit here are going to be using strategies that, one, benefit from increased implied volatility before earnings, and then strategies that benefit from a decrease in implied volatility after earnings. Strategies that are going to benefit from an increase, those are going to be, long calls and put plays, and then advanced option strategies like, debit spreads, strangles, and straddles. And then on the flip side, strategies that are going to benefit from a decrease in implied volatility, those are going to be my favorites. And that's going to be any strategy where you're going to be collecting premium. So you have sell to close, and that basically just means you're outright selling first, and then whenever you want to close that, you just close it. Okay. But yeah, these are going to be your credit spreads, iron condors, and there's a lot of other strategies, but I want to keep this kind of simple and beginner level. You can do plays with calls and puts, but there's a smarter way to go about doing that than just buying it and holding it. You got to play it smart. Now this is what you're going to do. You're going to look for stock, one, that have earnings at least 1 to 2 weeks out. And so the plan here is going to be to open our position early. So if you were going to buy your call or put, or if you were going to do like a debit spread, you would buy it early. So maybe a week or two out. And by doing this, you're going to get a price that's going to be cheaper before the implied volatility gap up right before the earnings. And then you want to find the projected direction that the stock is going to go in. So do you think it's going to be bullish, bearish, neutral? And that's going to go into, you know, of course, your stock trends, looking at news articles, seeing, you know, what's the news, and then also your market maker moves. So what I just showed you on Tiblio, let's go back to Tiblio, the amount that you feel like that stock is going to go up. So of course you can do that. We do that all the time using chart analysis and stuff like that. But you can also use your market maker move, the projected amount that the stock is going to go. So this is with Tiblio. Tiblio, they lay it all out for you. It's right there. And then also you can find this in Thinkorswim also. And it's going to show you, one, your implied volatility over here. So this percentage. This is your implied volatility. And then right next to it, that plus or minus is going to be your market maker move. So this is how much dollar amount the stock is projected to move up or down by this time frame. It's not an exact science, but it's definitely something to work with. So using this information makes it easier to pick strike prices for your option plays. And then for the expiration date, remember that we're going to want to take profit during the implied volatility peak and not lose out when it bottoms. So when we're trading for earnings, it's really good to look at option expiration dates that are closest to the earning announcement, but after the day that the actual announcement happens. So let's say you have a June 24th earnings report. So you're going to want to look at an expiration date of June 25th. That's going to be the day after. Okay. So yeah, that's going to be the basics of it. But here's just a few suggestions if you are directional about your stock. So let's say, for example, if you're bullish. And so a good bullish play for earnings are going to be put credit spreads. And a put credit spread it's a bullish move, and it's going to gain value as long as your stock price goes up in value. So you want your stock price to go up in value and not touch your strike prices that you're going to open up here. Okay. You're going to want to sell an out of the money put that's closer to the stock price. And then you're going to buy a more out of the money put. So you're going to buy one that's a little bit further out. I like to do credit spreads because essentially you make your most profit when this expires out of the money. So let's say you're bearish on it and you think the stock is going to drop during earnings. So for this, you would want to do a call credit spread, and call credit spreads are going to gain value from the stock decreasing. You just don't want it to hit your strike prices. Okay. And for the neutral positions where you don't feel like it's going to move very much, for that you can do iron condors. Those are my favorite for these plays. And essentially when you do an iron condor, you're going to do two different credit spreads at the same time. So you're going to do a call credit spread and a put credit spread at the same time. And the only thing that you want is you want that stock price to stay in between your two short. As long as that stock price stays in between there, when it expires, boom, we're in the money, honey. I mean, it's easy money. But you want to make sure that we're correct with our limits, though. That's the only thing. You don't want your price to get in between there. And then the worst that can happen with an iron condor is if it passes the one that you bought, not the one that you sold. This is the move. This is the way with options. Is like I said, it's cool to buy calls or puts, but I want to do something that I know is going to be valuable for me. So if you, like I said, so we said that higher volatility means higher option premiums, and that's why we really want to be doing moves where we're collecting premiums like the credit spreads and also the iron condors. Those are going to be, you know, the best for you, cheapest. Now I really want to go over more of these plays for you because these are really the plays that I'm doing more of now. So when people are asking me like, what plays are you doing? What are you getting into? This is what I'm doing right now. I'm doing these iron condors and spreads because with the unpredictability of the market right now, I don't know where she's going sometimes. So I like to have a range. That's why it's great to have your indicators, to use your support and resistance, and to trade in ranges and use trends. So everything that we've talked about before, I feel like everything is collectively adding up, and we are just becoming some of the best investors top notch, hands down. Okay, I wanted to give you guys some information about this cool sponsor, so check this out. So this is the Mobile Pixels Trio series. It's a 12x5 dual screen external monitor that attaches directly to the back of your laptop with 4 metal plates. As you see here, it easily attaches to the back of my MacBook Pro. It's light and it's easy to travel with. The tri-screen setup is also known to give you a 42% increase in productivity and reduce your mistakes by 20%. The Mobile Pixel Trio is compatible with both Mac and Windows products, and it attaches to your laptop with a simple USB cable. So since I've started using the tri-screen setup, it's really helped to improve how easy it is for me to trade stocks on the go, as well as edit my videos and have Zoom meetings with you guys. So definitely try out Mobile Pixel's external monitors, and they're also going to have a 30% sale going on this Father's Day, so make sure to check them out, and when you do, let them know I sent you. Yeah, but anyways, so that's gonna be it for this video. I'm gonna catch you guys on the next one. Value from this video, please make sure you click that thumbs up button. It really helps your girl out. Also, make sure that you subscribe, click the notification bell so that you get notified anytime I upload a new video for you guys. And I'm gonna catch you on the next video. All right.